Okay, good day everyone. Welcome to Looney Trade. In this section, we'll be talking on your daily bias and how you can frame a trade just using your daily candles. Now, to start this, you have to know first three important stuff: your previous day high and low, your swing point, and your previous week high and low. Those are the points that you're going to be taking note of while framing a trade. So that will frame your bias. You understand? As written on the screen here. Then don't forget your open high and close candle for bearish and bullish. I already taught you guys that, so um take note of that because we'll be using that in this um video in this section here. So having your previous day high and low, your swing point, and your previous week high and low will give you the ability to be able to know your draw on liquidity and reversals. You understand? That's what you're going to be taking your trade on. Now, when there is a failure to displace, taking note of the close on a candle. You understand? So if there's a failure to displace, that will give you your reversals. You understand? Taking note of the close on a candle. I will be explaining that on the chart. So leading you to the next day model. So what am I saying? Let's say we're starting off with um this candle. Let's start off with this candle. Then we'll write it. So we want to take note of the previous day high and low, right? So previous day highs of this candle will be this, and the low of this candle will be this. So you want to watch where this candle that we have now, where it closed. This candle, where did it close? It closed above. So since it closed above this previous day high candles, you should be your bias for the next day today should be bullish. So you should be expecting these highs to be taken. This candle high, you should be expecting to be taken. So you move your candle like this. Now what happened here? The high wasn't taken, but at least it got there. Then price went down. Take the low too of that candle, like a seek and destroy day, and close where the price closed on this candle. It closed in the range. You understand? It closed in the range, didn't close below or above the candle. So we want to take note now of what? We'll not have a bias for this day. We'll be taking note of the high and low of this candle, right? So we're taking note on the high and low of this candle. Price took the low, right? Which is like what? Price took liquidity from this low. So that would be what? Your reversals. It's already showing that price want to reverse. So you should be targeting that the next day, which is on this candle, will be bullish, taking this high. You understand? That's exactly what happened here. So this low is your swing. This is a swing point. A swing point is like a point having both, like your enemy of term low, where there is a low here and a low here. So now for this day now, we are having this high and this low, right? So what do I want to do? I want to take note of where is price going to go next for this. He already took the high, right? So on this day, we don't have any bias yet. So let's go to the next day. We're having this high and this low. Then what the candle do is here. The candle closed below the low. So since the candle closed below the low, that means you should be expecting that this candle will be bearish, taking this low. exactly what happened, and it closed below this low again. So we're expecting that the next day will be taking this low. That's exactly what happened. Yeah. The close of a candle is very important. They're not just random. So this candle now close below this low too. Again, right? So what you want to take note of is this and the I. So you'll be expecting for this day, you'll be expecting this low to be taken, which is what happened. But where did it close? It closed above that I. Can you see? Above this low, it closed above it. So can this today already show that price will be bullish, because price this all candle have these three candle have been closing lower, lower, lower. But this candle close above, which is showing a sign that price want to continue going higher. So for the next day, you should be targeting this high because price close above this low. So if we move it here and move here, which is what happened, can you see? Price close what? Above. So for this candle, we'll be expecting price to take this high again. That's for this candle, which is exactly what it did. It took this high. But now you have to take note of where the price close. You understand? Where the price closed. Price closed what? Below the high, which is this. This is where price closed. For this candle here, the next day you should be anticipating a what? A bearish candle taking this low. But what happened? Price didn't take neither the low or the high. It was in a range bound there. So we want to, at least for this day, you will not be meeting your bias. Then let's go here. Now for this candle, what happened for this candle? Price took this high, abi, and closed above this high. So since price closed above this high, we should be anticipating that the next day will be bullish too. But what happened? The next day was a bearish candle, right? So now we are anticipating that since we have the next day candle, where did it close? It closed below this low. So be anticipating this candle should be a sell trade taking this low. You understand? I was saying that this candle should be a sell trade taking this low. So that's how you can use your previous day high and low to frame a trade, just to know if price will be bullish or bearish. You understand? Now, talking on the swing point, these are swing points here. This this is a swing point. This is also a swing point. This. So we have an eye here. We have another eye here. Eye to the left and eye to the right. And this is the enemy of them high. So that's a swing point. So in a swing point, if price take a swing point, which is what this candle do, you want to know where the price closed after it took that swing point. It closed below that high. Can you see it closed here? This is the close of this candle. So you should be anticipating that the next day too will be bearish. So for here too, we have a swing point here. So let's extend it. For extend it, price took it, then where the price close, you have to take note of where price close. Let's zoom in. Let's zoom in there so we can see it clearly. Then you see price fails to close below this swing point. You understand? This is also a swing point because we have a low here and a low to the left and low to the right. So that's a swing point. You understand? So what happened? Price fails to close below this candle. Can you see? So that's why the next day you'll be having a bullish um trade. At least we have a bullish candle. So where is another swing point? We can also call this swing point. This is also a swing point. So that would be another wash you want to do. And this is also a swing point. So this candle here is also a swing point. So since this candle is also a swing point, you want to take note of these two. What the price do. After price took it, price close what? Above that line. You see? It still close above that line. So this candle here should be bearish. Taking using your swing point, not the previous day high and low. Now using your swing point, here should this candle, sorry, the next candle day should be bullish because price fails to close below that swing point. So you can also add some other stuff to it, like this fair value gap. We're in a fair value gap, as you can see. So you want to take note of the consequence encroachment of that fair value gap from here to here, extend it. So let's say we're having it here. I'll delete this. So you want to take note of this where the price close below this. Price close below that 0.5. So this candle here may bring maybe a bearish candle. So for swing point, it's showing us that it's bullish, but for the 0.5 level, it's showing us that it is going to be a bearish candle. And if you check in your day to your previous day, it's showing us that what is going to be a bearish candle. So those are the ways you want to use to frame your buyers. Now you can also use previous week high and low. So let's say previous week will be what? This is Friday, right? Monday. So this is the previous week high and low. As you can see, this high here. This high is is Friday. So this is what? Wednesday. This is the high, and this is Monday. We have Wednesday, Tuesday, Monday. So and this is the low. So previous week high and low will be this is the high and this is the low of that week, of this week. So you want to take note of. So price took the previous week low, which is what they did yesterday. As you can see, this candle. So that we should be anticipating a bullish movement where the price close. Always take note of the close. So for this week now, we have um from here. This is Friday, Thursday, Wednesday, Tuesday, and Monday. So the high and low of this candle will be what? Let me delete all this. The high and low of this candle will be what? This will be the low of that candle, and this will be the high of that candle. So you want to extend that too. You want to also take note of that. So for this week here, can you see this week here that took that liquidity, right? And this also is swing point, right? So price didn't close below that. You should be expecting price to go up. Now this is what Monday, so we can take Monday, Tuesday, Wednesday, Thursday, Friday again. Then we can take the high and low of that candle. This is the low, and what? This is the high of that week. So since this is the high of that week, so this is the candle that took what? That took the liquidity here of that previous week. The candle here took the 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 high of the previous week. Then where did it close? This is a bullish candle. It closed above. So you should be expecting a bullish trade. That means price should take this high, which is what it did on Tuesday. Will be Wednesday of the next week. So that is what you want to take note of. Where price draw on liquidity and what reverses. So reverses is when this example of a reversal, this is a swing point. Price took this and what closed below that swing point. So that's a reversal. It was bullish, now it's giving us a bearish reversal. Same thing here. Price took this low, then closed above that line. This where we have the bullish reversals. You understand? So we can also take note of this. Previous day high and low. We're taking note of this now. Previous day high and low. Price came, took the liquidity below this and what closed above that line. So after price closed above that line, what you should be expecting? You're seeing the next day to take this high. Exactly what happened. You understand? So price took this high and closed above that high again. So the next day you should be expecting this high to be taken. So what happened here? Price took this high but failed to close above that. Close below the high. Can you see? Talking of this high now. This high. This specific high. Price took it and fails to close. So on the next day I'll be expecting price to take this low, but price didn't do that. It's what? It took that high and but didn't take failed to take this high. So on this the next day, on this day, I will be sitting on the sidelines, meaning I won't virtually doing anything because price is in between this candle. So that will not frame a bias for us. So now what happened here? Price took what? The liquidity here, but failed to close above that. Then went down and took this. Then closed below this. So the next day you should be anticipating that price will take this low. And that's exactly what price did. Took this low and this what open and close. So the next day I'll be expecting price to take this low, which fails to do. You understand? Fails to do and went up. Even didn't take this high too. So on year two, I'll be sitting on the sidelines. It's not that's why they say every day is not a trading day. Understand? It's not every day you trade. You know when to stay in the sidelines and when to trade. So this is an example of when you should be staying in the sidelines because price is not giving you any clear buyer. Same thing here. Stay in that range. Stay in that range. So we want it out. So we'll be taking of this thing. So what happened? Can you see how price close above this high? Open and close. Price close above. So I'll be anticipating price to take this high for the next day, which is what they did. Can you see? Took the high and close above. So again, I'll be anticipating price to close above this high. Exactly what it did. So you want to just take note of your previous day high and low, your swing point, which was your previous week high and low to frame your buyers. You understand? Know when it's going for draw on liquidity, which is your target, or when it's giving you a reversal. Taking note of the close of a candle. That will lead you to know your next day model, to have your buyers for the next day trade. So that's what you need to know about your daily buyers. An interesting topic, and I'll still be broadcasting more on it. Thank you and have a nice day.